Today, the market had everything going for it. Inflation way better than expected. Five major banks all beat earnings and the market barely moved. Two things killed the rally: IBM and oil. Let me explain and then show you what I did to my portfolio. CPI came in at 3.5% annual. Expected was 3.8. Core inflation completely flat. Biggest monthly drop since April 2020. On top of that, JP Morgan, Goldman, Bank of America, Wells Fargo, Citigroup, all five beat earnings. Goldman alone jumped 9%. So why didn't the market explode higher? IBM crashed 25% today. Worst single day since 1972. The company warned that enterprise clients are cutting software spending and moving money into AI instead. That one stock wiped out nearly 450 Dow points all by itself. And then oil. Trump reinstated the Iran naval blockade. Oil jumped 2% because the Strait of Hormuz handles 20% of global oil. Any threat there and energy prices spike, which brings inflation fears right back. Great news, cancelled out by two bombs. That's why the market went nowhere. Now I was watching the financial sector all day looking for a put spread entry. Banks beat earnings, setup looked promising, but here's what actually happened to the stocks. Goldman jumped 9%, great. But Citigroup dropped 4% despite beating. Wells Fargo dropped 1% despite beating. That's the classic trap. Good earnings doesn't mean stock goes up. When expectations are already baked in, even a beat can cause sell off. XLF was just choppy all day, no clear direction, no clean support level, so I didn't enter. Forcing a trade into choppy action is how you lose money. Quick portfolio check. Both put spreads healthy, 38 and 40%. Call spread pulled back a little to 25%. As XSP tried to push higher on the CPI news. Still comfortable, still watching. One more thing I noticed. Nvidia surged today. IBM's warning about clients moving away from software actually caused a rotation into hardware and chips. Nvidia, Micron, Dell all jumped. And with semi earnings coming this week, I'm keeping my powder dry. Wait for the print, see where the stock lands, then sell premium below the support. Here is something interesting that happened today that most people missed. IBM crashed 25%, warning that clients are cutting software spending to fund AI infrastructure instead. That's actually good for chip companies. More AI infrastructure spending is equal to more chips needed. So money rotated out of software into hardware. Nvidia surged, Micron jumped, chip stocks rebounded. Now semiconductor earnings are coming this week. ASML, TSMC. If they confirm this AI spending trend, chips could keep running. But I'm not going to chase Nvidia at all-time highs. I'm waiting for earnings to pass, find the support and then sell premium, not before. So that's day 13. CPI and BACs were great. IBM and oil cancelled the rally. I stayed out of financials, no clean setup. Portfolio is green, Theta is working, and semi earnings this week could be next big opportunity. Subscribe and I'll show you exactly how I play it. See you tomorrow.